Good evening, ladies and gentlemen. I would like to welcome you to our weekly investor forum. We'll be jumping right into the company profile of Caribbean Cream Limited before we formally introduce our featured guest for this evening, Mr. Christopher Clark, Managing Director and CEO of the company. We encourage viewers to post their questions on social media and remember to tag us with the hashtag #MILInvestorForum. If you enjoyed this program, be sure to like, share, and subscribe to our YouTube channel. We'll also be featuring a market segment, so be sure to stick around until the end of the forum. Caribbean Cream Limited, better known as Creamy, manufacturers and sellers of ice creams and ice cream cakes in Jamaica. The company, and welcome Gary, by the way, the company also imports and distributes various types of frozen novelties. It distributes its products through wholesalers, retail outlets, and mobile vendors. The company was incorporated in 2006 and is headquartered in Kingston, Jamaica. Caribbean Creamy Limited, or Creamy, is a subsidiary of Scoops Unlimited. Scoops Unlimited Limited. The company is also listed on the Junior Stock Exchange, having their IPO back in 2013. I'd like to take this moment to remind you that if you're seeking to expand your portfolio or embark on your first investment journey, Mayberry can help you to achieve your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. Now let's introduce our guest for this evening. Chris is a graduate of the University of Michigan with a BSc in Mechanical Engineering. He went on to gain an MBA with specialists in both finance and marketing from University of Miami. Chris used his training in science and business to come up with a formula for creamy ice cream that was both rich in taste and affordable to the general public. To date, Creamy has seen 15 years of success marked by consistent growth under the leadership of Christopher Clark. Today, Chris will be giving us an investor update on the company, and I would like to welcome my very good friend, Chris Clark. Chris, welcome.
Thanks, Dan. Appreciate it.
And online, I'd like to also welcome our CEO of Mayberry, Gary Parrott. I think you're muted, Gary. Welcome again.
Hi guys. Hi Dan. Hi Chris. Welcome.
Gary.
Thanks for joining us, and I'd like to extend our apologies for Chairman Christopher Berry, who will not be able to join us today. So I'd like to jump straight into the first question, and after that, I'd like to show a profile of the company. But Chris, tell us, what is causing the drive in demand for Creamy's products despite the economic downturn?
Well, we were lucky to a degree. Creamy has always delivered their products directly to the consumer. Like, you see how we had the COVID thing and the pandemic, and people had to switch gears into home deliveries and stuff like that. We were always doing that. We always sell to the fudgies come to your yard, and they sell the ice cream. So that's why we were uniquely put in a good position to at least keep our sales. In addition to that, comfort food was an important thing to people at this time, where they couldn't leave the house, so they want good stuff to come to them. Ice cream was part of that.
Excellent. I mean, that's impressive. I'd like to actually show, Leslie, would we be able to show the actual highlights of Creamy on the screen for folks? So I'd like to talk a little bit about the numbers, because when we think of a company selling ice cream, sometimes we don't fully appreciate it. So Creamy is a company that is doing over $1.3 billion in sales for the 9-month period to November. Your year end is actually February, Chris.
Correct.
So results, 9 months results to November, folks, 8% growth in sales to $1.3 billion, $452 million gross profit, and $85 million net profit. They grew their net profit by almost 100%, by 96% to be exact. Ice cream business, you wouldn't think of it as being capital intensive, but they have over $1.2 billion in assets. And this business has grown its sales. If we look on the next slide, they've grown their sales each year pretty smoothly for the last 3 years. So we see sales topping $1 billion. We see assets topping $1 billion. And we see them generating very impressive profit. So this is a business that's done extremely well, trailing earnings of $96 million. It has a price to earnings ratio of about 20 times in a junior market where the higher mean for the PE is 23 times. So it's trading about 18% below the Harmeen mean. Current stock price of $5. This was an IPO in 2013 at $1, if I'm not mistaken, Chris.
Was $1, yes.
So just again to share some numbers, guys, on this fantastic company. I mean, you've done really well in the COVID environment. There are very few companies who can say they grew their profit by 96%. Second question we have, Chris, is with strides to reduce energy consumption costs, what is the current status of your negotiations in relation to LNG or liquefied natural gas for your depot?
Well, we've negotiated and we've actually signed a contract with New Fortress. That's a very recent thing. So we're on track with that. The installation of our combined heat and power plant is on track. There's been some delays due to COVID restrictions as far as travel, sending our expert there, their experts coming here. But we're happy with the progress of it.
Excellent, excellent. And I won't bother to ask Chris what the energy costs are like, but I have no doubt they're significant, and I happen to have about 16 years of experience in energy. So usually switching to this kind of CHP plant, he's going to save anywhere from 20 to 40% on his electricity costs, and I'm going to bet you that's going to flow right through to the bottom line. In general, that's the objective, to save energy costs and improve your
That's the objective, to save the overall energy costs. Remember, there's also combined heat and power.
Heat and power.
We're going to use the heat from the plant to help to offset our petcom bills.
Very good.
So we're going to use the heat from the plant to pasteurize the mix before we make the ice cream. So we're going to reduce our overall
energy use.
Usage significantly.
What about cooling? Are we doing any cooling?
Not currently.
Okay.
There's thoughts of that in the future, as you well know.
Yep.
You can use the heat from the power plant to power a chiller.
Yep.
And we're looking at that as a separate project somewhere in the future. We want to land this stage one first, and then we'll look at the chiller. But yeah, we will be looking at a chiller sometime in the future.
Excellent.
To offset the energy costs even
associated
further.
with the cooling, absolutely.
Yeah.
How much do you expect profits to improve by when the energy conversion project is completed?
Well, I don't want to go into specifics about exact numbers.
Yeah.
We do expect it to significantly affect the profitability of the company.
Absolutely. And again, folks, we've already seen a 96% increase in profitability, substantial growth in the business over the last 3 years. I mean, even at $5, which is 400% growth since 2013, I still think the stock has some good legs, and you guys, continue to grow from strength to strength. So congratulations again on that. Gary, do you have any questions for Chris?
I do. Are you hearing me?
Absolutely.
Absolutely, yeah.
Yeah. Hi, Chris. Welcome. You've done an amazing job. I think you're looking at ways to reduce the power, etc. But let's touch on the top line. What's driving this growth? Are you taking market share from your customers, or is the market size growing?
I think it's more the market size growing. When we look at the market share, we're still the top ones in the market, about 55 percent. We don't see our competitors losing market share. So the overall market itself is growing. When you look at ice cream, especially the Jamaican style of consuming ice cream, it leads to a lot of entrepreneurship out there. So a lot of people have gotten into the game of selling ice cream, and then we support them. So Jamaicans tend to have an entrepreneurial spirit. So a lot of them, you have your day job and then you hustle on the side by selling ice cream, and we support that.
Yeah, and the thing that impresses me with the results, it's only an 8% growth in sales. That translates to $50 million improvement at the gross profit level, and then it all flows down pretty much to the net profit level. We see the net profit also growing by over $40 million. So 8% growth in sales, and yet the profitability is growing by 96%. That's impressive. It's a great question, Gary, about taking sales away from competitors. You know, a lot of people don't know this, but it's a family-run business for the most part, and one of the separate businesses is Devon House Ice Cream.
Yes, that is the business that my mom started and where I learned the business of ice cream. And so I came and took that knowledge and then I used that to kind of offshoot in this different branch of ice cream.
Which can I think of it as a lower cost ice cream?
It's a lower cost, like
Yes.
in the terminology,
Yes.
that Devon House is a premium high-end product.
Right.
Cream is considered a normal or regular, and then you have the economy brands that's underneath that.
Right.
So, you know, we tend to bring more, well, the value proposition is the same. It's just which angle you want to buy at.
Absolutely. And the thing that's pretty impressive about your performance despite COVID is it sort of tells me you don't have a huge concentration risk whether to the hotel sector or to school sector.
No, we don't have, not to the schools or the hotels. We sell mostly to Jamaicans and entrepreneurs and stuff like that.
Excellent. And so that's pretty impressive. So when you're thinking about companies to invest in that are COVID resistant, you know, Creamy is obviously one of them. And
Yes.
we've seen some folks fall down in ways we didn't expect because you didn't appreciate the ties either to schools or to the tourism sector. So you're not exposed to either of them. Will the company be increasing its number of outlets to expand its reach?
We have recently increased the number of outlets. We opened one in Ocherius.
I saw that.
While previously we opened one in Maypen. It's not a strategic initiative of us to increase the amount of depots or outlets. We look for spaces where, say, it's lacking, or we think we can service the area better. So we're looking for opportunities, but it's not like a driving goal of the company. There's plenty of independent depots out there that do a good job of the areas in which they're in, and we will gladly just support them.
Great. But the Ocherius edition seems to be quite notable. I read it even in your financial release.
We're very happy with the new ones, Ocherius and Maypen both. We're very happy with the early results.
Yeah, and I will confess, I was in Ocherius over the weekend, and I thought of calling you to figure out where it was because we wanted to have ice cream, and I said to my wife, we got to support Chris, but I didn't bother you in the end. We're going to be back next week, and for sure I'll knock you up again. Fifth question from me. Last year, the company entered into a shared service agreement with Scoops Unlimited, which we just discussed about. What impact has this had on the company today?
It had a decent amount of impact, helped to lower the admin costs reasonably so.
Yeah.
You would assume that you take certain aspects of the business and you share the talent with another company. It helps to lower costs, increase productivity also.
Right.
So we've been happy with the results so far.
Well, I'm happy with the results as well, too. And for full disclosure, before I go over to Gary for a question, I do know Mayberry happens to be a significant shareholder in the business, which makes me even more excited. Hey, Gary, any questions from you?
Well, just to follow on the first question, you know, the fact that you support the entrepreneurs, which I think is helping the market to expand. A while ago, the question put to you by Dan, whether you're in the hotels or you're in the school system, once COVID is that an opportunity for the company to further expand its revenues? I mean, to try and replace some of the imports in these areas?
Hotels for sure. Hotels are an aspect which we're going to target once COVID passed for sure. Schools, we've been doing schools a little bit. It's a little bit more tricky because you have the fudgies that go to the school gate and you don't want to interrupt their sales, right? But definitely hotels is where we're going to try and target hotel sales.
Good deal. And I suppose that Ocho Rios branch may help you the depot should help you to be able to try to get towards them. Good. And then with respect to the company's goals for 2021, what is management's outlook for the remainder of the year?
For the remainder of 2021, we're positive on the outlook of the, especially the sales side of things. As more and more people get the vaccine, we expect global demand for our materials to go up, like milk powder, fats and stuff like that, which might drive up commodity prices, which affect us. But as far as demand and stuff, we expect it to be more of the same going forward.
Excellent. And tell me, I can see some seasonality in your numbers. What is it about the first and second quarters where sales look to be much stronger versus the other quarters?
I'm not entirely sure.
Looks like you have stronger sales maybe in the summer period.
We have some stronger sales in the summer. Usually when the kids are not at school and stuff like that help drives up. Christmas is our biggest time for the year. Those last 3 weeks in December and a couple of days in January, a very intense sales time for us.
Right.
So we do a lot of prepping for that particular time period.
Well, that's good to know, because if the results have been growing the way that I've seen, I mean, your August quarter was the best quarter in like 10 quarters that I could see. I'm looking forward to seeing the year-end results, if that's going to include a quarter that could be strong. So we look forward to seeing the fourth quarter results and continue to watch you guys grow from strength to strength. Gary, any further question from you?
Well, I'm still on the same path. I mean, we've spoken about Jamaica, Chris. Are there any opportunities outside of Jamaica to continue growing this company? I mean, the ability to convert sales to profit is amazing. So I think the biggest drive is to find new sales and new markets.
Yeah, well, we don't have any immediate plans to export. It's a long-term goal. There's a lot we have to do to prep for export. A lot more rings to jump through and stuff to sign in order to get the export. However, it is a long-term goal of ours. Where we expect significant growth in the immediate future is the expansion of our product line. We introduced the icicles about a year and something ago. They're doing well for us. We're very happy with it.
Excellent.
The next thing we expect to introduce is the fudge at some point. COVID has delayed the introduction of the fudge. Nothing to do with our manufacturing, more to do with the learning curve of ours to develop. As in, we can't fly in experts, we can't fly in people, so it's a lot harder over WhatsApp video to figure out, to teach people how to do things.
Right. But either way, there's still good legs left in you for growth, is what you're obviously saying, in the frozen novelties and other...
Absolutely. There's a lot of areas for us to go to. We have a whole team at Creamy, which is centered around trying to think of new products to come to the market.
Excellent. That's pretty impressive. And the new line of frozen novelties seems to be doing well. I mean, do you plan on further expansion in that? I guess we just spoke about that a little bit.
Yeah. I mean, there's fudges. Fudge is the one that's next on the list.
Right.
We have...
So you don't make that now? You import it?
We currently import, all what you can fudge or milk lollies, whatever you want to call it. We import all of those. We want to go into our own manufacturing. That should come out sometime this year. And then we have a development team that has we have stuff in the pipeline that gradually going to come up, and we introduce that into the market as we go on.
And I think the thing that impresses me is, again, over the last 3 years, not only you growing your top line, you're growing the bottom line, which means you're protecting your margins. So you're not having to sacrifice margins to get that sales. And I kind of sense the more you make the stuff yourself rather than import it, that supports your ability to keep the margins pretty strong as well too. Great. Well, I look forward to the power plant because I'm excited. We talked about that before because of my previous experience, and I'm convinced, that that's just a good direction for you guys to go because of the combined heating and power benefits, let alone if you get at some cooling as well too. And I think you're just gonna need more space to be able to store your products. Well, I appreciate that, Chris. We're going to move on to some questions from social media eventually, but right now I'd like to look at our top stock pick for this week. Good deal. So this week it's Last M for me, Lasco Manufacturing, and it's a great company, another company that has been growing in terms of profitability in a significant way. Lots of similarities here between it and Creamy, believe it or not, in that this is a company that grew its sales by 7%, up to $4.1 billion, and through that little growth still managed to increase their profit by 31% from $560 million to $737 million. They're trading with a PE ratio that's only 13.6 times, again, in a market where the junior market, where the market mean average is 23 times. So this is a stock that's going to grow by, in my opinion, by 30 to 50% over the next 12 months. So you need to definitely make sure you get some. On the next slide as well too, I show what's happening with the sales trend. Again, they've been growing their sales consistently for the last 3 years. And at the profit level, you can see that they're inching up on the profit. This company is making $1.1 billion profit. I mean, that's huge, whether you're on the junior market or on the main market. Has a total market cap of $15 billion. It has good liquidity. And I think it's just a great company, Lasem, that's growing from strength to strength. They sell most of their products on to Last D. The distribution company was doing a great job of doing the distribution. Lasco has great products in their line. And again, I think it's just a great stock. Yeah, continuing in our stock analysis, I'd like to look at also the top decliners and top gainers for the week. And starting with the decliners, we first have Jamaica Broilers Group, which shrunk by 11% this week. First Rock US fell by 8.55%. Cygnus Jamaican fell by 7.26%. And Elite Diagnostic fell by 6.44%. And moving on to the top gainers, Cargo Handlers up by a whopping 20%. Siboney Group by 18%. Mayberry Jamaica Equities by 12%. Go Mayberry. 138 Student Living, that's up by 9%. And Lasco Distributors, a related company to my top pick for this week, that one's up by 6.35%. Gary, your thoughts on what's happened for the week in the stock market or in relation to my top pick?
Well, I like your top pick. I actually sit on the board of Lasco Distributors, so
more disclosures again.
There you go. Manufacturing does sell a lot of its products to Lasco Distributors. But again, it's another food company that has done well during COVID, similar to stocks like Grace Kennedy, etc. And I think as long as you have COVID and COVID-related effects around for some time, which I project for at least another 18 months, these companies are going to outperform. So they have little or no debt. They generate a lot of cash, and it's just a matter of finding additional products to see them continue to expand. So I like your pick.
I totally agree, and I'm going to confess I'm embarrassed. I forgot you were even a board director, so folks, I assure you that my pick...
No, I'm a director of Lasco Distributors. I'm not a director.
Oh, not Lasem. Oh, there you go. So,
right.
So I'm just trying to assure them that I don't have a bias. I suspect Mayberry is still a large shareholder in Lasem as well, too, right? Gary, I'm sure we have a significant...
No, we have a large position in distribution, okay. But our distribution, our holding in Lasco Manufacturing is not as large.
Okay, there you go. So, Chris Berry, if you're hearing me, you need to go and buy some Lasem including our viewers out there. Good deal. So I'm told we have some social media questions for you, Chris, on the company. So first one comes from Patrick on YouTube, who asks, what is the company's outward strategy around distribution? Is it brick and mortar versus mobile distribution?
It's an even mixture of both. So Creamy comes to the market in two main ways. We in the supermarkets, gas stations, stuff like that. We sell to them. We also sell to the market, which is the fudgies and the people that sell from their homes. It's about a 50-50 split, whether people do a mobile selling or they sell out of their home. Usually it's a gender split,
Right.
where men sell on the road and women tend to sell out of the house. But yeah, we're not really picky about where or how you do it.
Got it. That makes sense. I've got more questions in. Thanks for this. Coley on YouTube asks, regarding product lines, anything in the pipeline regarding non-dairy items?
Non-dairy items they're in the pipeline. It's a little bit early to tell if it's going to make the actual market or something that we're going to sell. Non-dairy is a niche market. It's a profitable niche market. Mm-hmm. We're not sure whether we belong in that niche market yet, but it's something we look at continually all over time. But
Right.
That's something that you're going to see come to market soon.
Right. So you're certainly prepared to look at it. Okay, great. Appreciate those questions. We're going to move on now to the market segment. And so we'd like to look at 3 top stories on our Mayberry website. Firstly, we have EE inflation of 0.9%. And then we also have the 6 months results coming out for Margarita Turks Limited, which reported a net loss of $805,000. And thirdly, we also had 6-month results coming out for Express Catering Limited, which came out with a loss of $1.6 million. You can check these things out on our website. And of course, it just so happened to have Ian Deere with us about a week ago, where we talked about what was going on with Margaritaville and Express Catering. So there's no surprise actually there to see losses in those businesses which are tied to the tourism sector. But I remain confident, and these are their 6-month results to November. I remain confident that tourism is going to come back hard and strong. We think the next 6 months in particular are going to be challenging, but I personally would expect Margaritaville and Express Catering to bounce back strong. Gary, do you have any thoughts on that?
Well, we're not surprised. I mean, we had Ian last week, and I think the line that says it all: revenue is down 99%. So that's directly related to what's happening at COVID. Tourist arrivals have dropped significantly. And, the question becomes, I think with vaccinations on the horizon, the point is, how quickly can those vaccinations start to take effect? So in a company like this, what the investor needs to look for is, what is the burn rate? What is that cash burn rate? And then also to look on the capital of the business. And what you would want to see is if that burn rate is going to be less than the capital of the business. Because obviously, if it exceeds it, then the business is in danger of going bankrupt, insolvent, etc. And those are words you don't want to be speaking about in the same sentence with a company.
Right.
So that's what I would say to investors who might be thinking about making a punt. Calculate whatever burn rate there is. I mean, everybody calculates differently. And look on the available cash, the available capital, and I think that gives you a decision to make. Once you determine that the company will be able to survive that, then you have to then go back to what was the performance of the company pre-COVID. And that would be an expectation once you get outside of COVID. So that, as you keep saying, Dan, the company could come roaring right back, you know. And so those are the two key parameters I would advise customers and investors to think about. And once you come to a conclusion on that, your investment decision becomes much clearer.
Excellent. Thanks for that, Gary. Very, very valid points. And I think we have time to squeeze in one more question from social media. I see Spence on YouTube asking, Chris, how difficult is it to come up with new products that will take the market?
It's a difficult. It's a bit of a. What you do is you have a lot of stuff in the brainstorm stage, and as they come up, you develop them, and you know, every once in a while you pick something out of the basket that you think will work. You take it to the market, and you know, sometimes they work, sometimes they don't. But you know, the ones that do work always make up for the ones that don't, right? Once you have a product that's good, unique, that the people like, those are products that build a business. So it's difficult. Our strategy is to come up with a number of products and try them out. I'm sure other people have different ways of doing it.
Right. But the icicle stuff you did in the last year certainly did.
That did hit. I'm not going to tell you about any of the losers, but that one did hit.
Good deal. Great. And I got one more question from, I believe it's from Christopher Berry. Is that correct? And Chris is asking, do you plan to buy out Devon House, that's Scoops, I guess, and merge the two companies?
No, yeah, that's interesting from Chris. There was no plans to do a merger of the
two businesses.
The two businesses.
Good deal. Thanks for that, Chris. Of course, I mean, you guys, again, great company in terms of building retained earnings from $500 million to over $750 million, growing your asset base again from $700 million to $1 billion, and all the time while carrying very small amount of debt. I think your net debt is like $100 million. Mm-hmm. So I think you're doing really well. You know, maybe you need to be talking to Mayberry about how you can do some additional acquisitions. I gave my top pick for the week. Do you happen to have a stock that you like that's not creamy that you'd like to recommend to folks out there?
Not that I'm actively looking at. In the past, I have invested a lot in SVL's been good to me.
SVL's been good to you. Excellent. You do know Mayberry happens to be a top shareholder in SVL, and
I do.
And Gary happens to be the executive chairman. It's a great company. SVL gives very good dividends, and I think they're certainly poised for growth. Pay attention, folks. You'll hear some announcements in recent times, I imagine. So thanks for that, Chris. We really do appreciate that. Gary, always appreciate your insight. You know, thanks so much for helping out. To our viewers, thank you all for being a part of our weekly investor forum. I'd also like to thank our special guest, Christopher Clark, CEO, for his participation in today's investor briefing and for your insights. We're certainly looking forward to having another insightful discussion in the upcoming week. We'll be featuring Cecil Foster, Managing Director of Fosteridge Company Limited. Be sure to follow us on social media to stay up to date with our live streams. Don't forget to subscribe to our YouTube channel, Mayberry Investment Limited. Thank you all to our viewers for tuning in today. We'd like to encourage you to keep safe and remember, wise investors, Gary?
Slow and steady wins the race.
Goodbye. Thanks, everyone. Take care. Thanks again, Chris. Really appreciate it.